Good morning, everyone. Welcome to another Lectures of the Governor talk. We are particularly happy to have Governor Gabriel Makhlouf here with us. Gabriel, as you'll see, and you'll see from your CV, has been one of the policymakers that has been innovating around the world. He started his career, I think, in the UK, but then he moved to New Zealand. I had the pleasure meeting him in New Zealand when he was at the time the top civil servant secretary at the New Zealand Treasury in New Zealand. He was pushing very hard at the time to do something that we then at the OECD were also trying to push, which is basically to bring more well-being indicators into budget and to try to assess not only through GDP and other hardcore measures, but other type of measures into budget. And so Gabs, as sometimes he's also known, so the governor knows how to be an innovator and also to be somebody pioneering policy making. So it's a particular pleasure to have him around today, talking about one topic that is going to be extremely important to all of us, which is basically demographics, what is happening regarding the economics of aging and longevity, how can we redesign labor markets. And so it's a topic that the OECD is obviously working very closely, and we've done recent research on the topic as well, and we will do a lot more in the near future. But I think it's very important that central banks talk about these issues, long-term issues that affect not only monetary policy and financial stability, but also have a huge repercussion for productivity and other topics of the society. And so the governor has been basically in this position as the governor of the central bank since September 1st, 2019. It chairs the Central Bank Commission, is a member of the Governing Council of the European Central Bank, and a member of the European Systemic Risk Board, and is also Ireland's alternate governor at the International Monetary Fund. Without further ado, I would like to ask the governor to go ahead and give his talk, and then obviously we'll open for questions. Thank you.
Thank you very much, Alvaro. Good morning, everybody. It's great to be welcomed by an old colleague, but also by a forthcoming new colleague, as hopefully it won't be very long before Alvaro joins the Governing Council. It's also a pleasure to be back at the OECD and to talk about a topic that's really far from the top of the policy agenda, which is labour market developments. And whether it's in relation to long-run growth prospects or the drivers of inflation, labour market dynamics play a crucial role. And my speech today will cover three interrelated topics. First, I'll reflect on the resilience of the labour markets over the last 5 years, highlighting the key developments that have seen employment in the euro area grow steadily, despite a sequence of negative shocks. And next, I'll explore how looming demographic challenges, aging populations, declining fertility, and shrinking workforces will drag on employment growth and therefore economic growth in the coming decades, with migration only offering a partial, albeit important, solution to the challenge. As demographic headwinds bite, finding ways to boost labour force participation and productivity becomes even more important as a driver of economic growth. And despite this, policy reforms to structurally raise participation rates in Europe have been slow in coming. And on top of this, recent productivity trends for the euro area are not good. In the final part of my speech, I'll discuss how new technologies and artificial intelligence specifically can be harnessed to boost productivity and how this interacts with some of the labour market dynamics. Now, in the face of unprecedented shocks in recent years, the euro area labour market has held up exceptionally well. This performance is all the more remarkable when we recall the hysteresis that characterized previous downturns. And it's why I refer to the labour market as the quiet champion. The labour market entered the pandemic in good shape. Monthly unemployment in the euro area reached a low of 7.2% in March 2020, reflecting steady, if unspectacular, growth since 2015. Notably, around 2/3 of the expansion of the labour force in the years prior to the pandemic was immigration from outside of the euro area. And around this time, falling unemployment and rising job vacancies were also contributing to tighter labour market conditions, seen as a key driver of wage growth. Now, the pandemic triggered an immediate labour market disruption. Labour demand ground to a halt as job openings collapsed. Unemployment peaked at 8.6% in August 2020. However, the euro area's response differed markedly from other regions, particularly the United States, which saw a much larger unemployment spike, and the difference reflected the extensive use of job retention schemes across euro area countries, which maintained employment relations while reducing working hours. These policies helped to support incomes in the face of an exceptional shock, but also facilitated a smoother recovery once economic activity resumed. By the third quarter of 2021, little more than 18 months after the start of the pandemic, the employment rate in the euro area was above pre-pandemic levels at 69% of the working age population. Post-pandemic labour market dynamics have, however, proved to be more than just a rebound. Employment has continued to grow despite further shocks such as the war in Ukraine and rising geopolitical tensions, with the euro area employment rate hitting 70.8% in late 24. Unemployment hit an all-time low of 6.2% at the same time and has remained around that level since. Now, several factors contributed to this resurgence. On the demand side, post-pandemic pent-up demand, especially in consumer-facing services, boosted the demand for workers. The slow adjustment of real wages, falling by around 2% between 2021 and 2023, was another important factor. As wage adjustment to the inflation surge lagged, this acted as a shock absorber, making labour more attractive than capital and thereby supporting labour demand. ECB analysis points to the combined role of high profit margins and falling real wages in providing financial space for firms to hoard labour during the recovery from the crisis, especially in manufacturing. On the supply side, the labour force in the euro area increased by over 8 million between 2021 and 2025, growing at an average annual rate of 1.2%. This is almost 4 times the rate of growth we saw prior to the pandemic. And much like the earlier period, migration has been an important source of workforce growth. Eurostat data shows that almost half of the increase in the size of the labour force is from foreign workers, that is, non-euro area nationals. In addition, foreign workers have also seen a larger increase in their employment rate in recent years relative to nationals. The combined effects on GDP are large. The ECB has estimated that 4 of the 5 percentage point cumulative increase in GDP between 2019 and 2024 is attributable to foreign workers. That's a euro area picture. When we look at individual countries, the relative role played by migration and increasing employment and participation rate differs. For example, growth in Italy, with a relatively lower participation rate, has been helped more by higher participation rates of nationals, whereas the likes of Germany, with a declining working age population, has relied more on an influx of foreign workers to offset the effects of aging. And some countries like Ireland and Spain have relied on both channels, with higher participation rates and inward migration boosting employment in both countries. Now, I emphasize the migration channel for 2 reasons. First, assumptions about migration patterns can have a big impact on population growth estimates. Second, in the euro area, migration happens across the skill distribution. There was an almost identical increase in the share of high-skilled migrant and national employment between 2015 and 2023. This suggests that migration also matters for productivity growth, and I'll return to this in a minute. Now, looking ahead, at a euro area level, some labour market cooling is expected over the current forecast horizon through to the end of 2027. The ECB September staff projections have annual employment growth averaging around 0.5% over the next 2 years, which is a significant drop-off compared to recent experience. Now, some of this reflects a cooling of labour demand. We're already seeing this in job vacancies, which have declined from their post-pandemic peaks, although at the country level, we see cross-country differences in these trends. For example, job postings in Spain and Italy remain around 50% above pre-pandemic levels, whereas in Germany and France, the figure is closer to 15 to 20%, reflecting more labour market cooling in these countries. Now, the employment growth slowdown also reflects demographic factors that were initially rather slow-moving, but are now beginning to bite. I've previously talked about this as the quick phase of demographic change, a period when the population structure in many countries will go through a rapid transition phase, culminating in a far larger retired and elderly population. It's essentially an inversion of the population pyramid that has characterized many developed countries for decades. Between 2024 and 2027, the Euro area working age population is projected to fall by 0.7%, or 1.5 million workers between the ages of 15 and 64. Some countries see large declines. For example, Latvia sees a fall of 4.8%, Portugal 2.1%, Germany 1.5%. Other countries such as Belgium, France, Spain, Netherlands all start to see their working age populations decline from 2027 onwards. The longer term impact is stark. The old age dependency ratio in the Euro area, that is the population aged 65 and over as a proportion of the population aged 15 to 64, is set to increase sharply from 33.7 in 2022 to 51.2 in 2050. And just to be clear, those numbers I was talking about earlier was between 2024 and 2027. We're in 2025. So it's, we're living this right now. These trends will exert varying and sometimes contradictory effects on inflation. An older population of lower consumption and higher savings could place downward pressure on aggregate demand, limiting price growth in certain sectors, which aligns with the secular stagnation hypothesis. At the same time, a shrinking working age population will tighten labour markets in the absence of increases in labour force participation rates, which will put upward pressure on wages that feed into services inflation. Moreover, as older cohorts consume more healthcare and age-related services, relative price increases in those areas may become more entrenched. Now, the balance of these effects is hard to predict, but one potential outcome is higher structural inflation in labour-intensive, non-tradable sectors, in other words, services, even as weak aggregate demand keeps headline inflation subdued. This creates an environment in which inflation dynamics are increasingly segmented, complicating the life of central bank governors. Returning to demographic trends, the workforce in Ireland is also aging, although the trend somewhat lags from what we see in other European countries. There are two main reasons for this. Relatively higher fertility rates during the early 2000s will continue to support growth in the working age population in the near term. However, rapidly falling fertility rates, Ireland's fertility rate was 1.5 in 2023, down from 2 in 2003, and converging on the EU average of 1.4, means that from the mid-2030s onwards, Ireland has one of the fastest aging populations in Europe. Our own analysis at the central bank projects the long-term growth rate of the economy to slow by 2050 to below half its historic average growth rate observed over the last half century. Now, the second mitigating factor is migration. And a recent report by Ireland's Department of Finance shows how inward migration has been central to Ireland's growth story over the period between 1995 and 2020. Over the period, all European countries saw an increase in the share of international migrants in their population. But Ireland's trajectory stands out from just over 1 in 20 international migrants in the population in 1995. By 2020, this was 1 in 5, similar to figures for Austria, Germany, and Sweden. As that report notes, while it can have large impacts, net migration is hard to predict. And in the case of Ireland, at least, it's been historically under-predicted. However, even baseline assumptions of net migration returning to pre-pandemic levels of around 40,000 per year sees Ireland's labour force growth stay in positive territory through to 2047. Although in a lower migration scenario, it starts to contract from 2041 onwards. The point here is not to get bogged down in population or migration projection scenarios, which, as I said, are highly uncertain, but rather to highlight the extent to which migration can help mitigate the demographic and growth drag from aging populations and falling fertility rates. This could allow time for governments to develop and implement other policies, mainly around labour force participation and productivity, which I'll come back to. Some final thoughts on migration. The preceding discussion focuses on the direct impact of migration, is on numbers in work. But as OECD research, among others, has shown, migration supports growth beyond direct effects, including the potential net positive fiscal impacts, taxes and contributions that migrants pay compared to the benefits and public services they receive, the fostering of trade linkages, and the contribution to job creation and entrepreneurship. And while migration can offset some of the drag on economic growth from unhelpful demographic dynamics, as well as helping to smooth out cyclical labour market fluctuations, we can't ignore the growing political and social resistance to immigration in many countries. For me, it emphasizes the importance of robust evidence and building a narrative that is based on facts. Research has shown that perceptions about migration can be wide of the mark, be it about the number and characteristics of migrants or their economic contribution to society. It's important that decision makers continue to have a solid evidence base on the impact of migration on our economies, including how it interacts with demographic trends. And OECD research and analysis provides a valuable evidence base to support effective decision making. Now, migration can mitigate some of the effects of the coming demographic changes, but it cannot push back the tide. So I want to look at how increasing labour force participation and productivity can help. As I've said previously, with shrinking populations, increasing labour force participation is a necessary part of the solution. For the working age population, it's important that reforms to tax and benefit systems remove disposable income cliff edges and tax wedges that can impinge on incentives to work. In this regard, the ongoing OECD research on how tax and benefit systems affect incentives to work provide an important public policy role. We also need to look beyond the traditional definition of working age population as being between 50 and 60 or 15 and 64 years of age, and look to boost participation in the post-60 and post-65 population. In a world of longer lifespans and longer health spans, sustaining living standards will need people to work beyond what is currently considered typical retirement age. The impact of increased labour force participation in the post-60 or 65 population is potentially large. If you take the old age dependency ratio as an example, defining the working age population as 15 to 69 instead of 15 to 64, and taking Eurostat's current population projections, the Euro area dependency ratio in 2050 is 36.6 instead of 51.2. In Ireland, it falls from 43.2 to 29.1. To put these changes in context, allowing for a high migration scenario in population projections results in a relatively small decrease in the Euro area 2050 dependency ratio to just 48.9, and for Ireland it falls to 40.8. So participation is more significant than migration. And shifting our perceptions of the working age population can alleviate some unpleasant demographic arithmetic. However, given relatively lower participation rates in general for older workers, these effects likely represent the upper end of potential upside scenarios. Having said that, labour force participation rates have increased for the 65 to 69 age group in recent years, from 13 to 18% in the euro area between 2019 and 25, and from 23 to 30% in Ireland over the same period. In the US, participation for the 65 to 69-year-old in 2024 was 33.4%. So far, my remarks are focused on the role, the size of the working age population in growth, but I want to just say a few things about productivity. And in previous speeches, I've highlighted the drivers of weak productivity growth in Europe and policies to try and improve it. On the policy front, implementing the proposals in the Draghi and Letta reports must be a priority, and you won't be surprised that this was a topic of conversation at last week's meeting of EU finance ministers and central bank governors. But here I want to talk specifically around developments in artificial intelligence. We're still in the early take-up phase of a technology that is itself rapidly evolving. But it's already clear that AI adoption rates are faster compared to historical episodes of new technology rollouts, such as the advent of the personal computer. What we've seen so far in terms of the use of AI, including in my own organization, suggests that it has the potential to disrupt existing employment patterns, both as a substitute for existing labor through the automation of certain tasks and as a complement to existing skills. Together, this will create new opportunities for workforce growth and productivity gains. But we need to prepare now for the changes that are coming. This means, among other things, more flexible labour markets that allow for worker mobility within and between firms, as well as across sectors and occupations. And it means providing training opportunities for workers, both younger and older, to drive upskilling and support transitions to new roles that may not even exist yet at the moment. And in many ways, this is revisiting the flexicurity debate in Europe. Many of you will be familiar with the concept, but it's essentially about balancing flexibility for employers and security for workers so that firms and workers can adjust efficiently to economic changes and new technologies. In the early 2000s, flexicurity became synonymous with labour market structural reforms. And as you'll have seen from our September decision, less than 2 weeks ago, the ECB's Governing Council considers it important for governments to adopt growth-enhancing structural reforms that can strengthen the euro area economy in the current context. And in the context of AI, and given the role of startups in driving innovation historically, we must reduce both bureaucratic and financial hurdles to starting and scaling up, which is a recurring theme in both Draghi and Letta. Reforms that align and streamline hiring procedures across the euro area will help to minimize risks to firms of adopting new technology. And the mutual recognition of skills and aligning this to the national university and vocational training programs at the country level will help to balance supply and demand for skills at the European level. As AI shifts the demand for skills, active labour market programs that focus on reskilling, not just younger, but also mid-career workers, will be important. So let me start concluding. Despite a series of negative shocks in recent years, employment in the euro area has steadily grown, driven by strong post-pandemic demand and increased labour force participation, bolstered by inward migration. Looking ahead, demographic shifts will slow employment growth. Migration offers a partial solution, but the dividend from raising labour force participation rates is arguably greater. And we need to be thinking about participation in the context of new generations living longer and living healthier lives. Raising productivity growth will be fundamental for raising living standards, and the rollout and rapid adoption of AI has led to much hype about its productivity promise, but the eventual impact remains highly uncertain. Nonetheless, flexible labour markets and proactive reskilling of workers will be essential to maximise the productivity-enhancing potential of such technology. And finally, to sum up, what the data is telling us is that our societies are facing a series of important choices if we want to sustain or improve our future living standards, or perhaps more accurately for some of us, at least the living standards of our children and grandchildren. We could, of course, just accept that living standards will worsen, but I see little evidence that poorer living standards are likely to be tolerated by the majority of our citizens. I suppose we could also see an increase in fertility rates, but I'm not sure this would solve the challenge on its own. And on the evidence, that would require a significant reversal in recent trends. Our choices are likely to involve improvements in our productivity, an increase in labour market participation, and inward migration. In my view, a combination of these, and they're not mutually exclusive, offers us the most effective route to building the best opportunities for our grandchildren. I don't suggest that this will be straightforward. To help us to choose well, we'll need researchers and organizations such as the OECD to set out the facts in an accessible way and enable informed choices to be made by policymakers and which can be understood by our citizens. Thanks very much.
Well, thank you very much, Governor. Obviously, at the OECD, what you're saying is music to our ears, because basically these are areas in which we are actively working very closely and trying to understand what would be the impact, but also what are the policies that could be done in order to mitigate the impacts and obviously to prepare for the future. Productivity growth slowdown is something that we've been highlighting for a while, and we just celebrated the 10 years of the Global Forum on Productivity, and the issues on aging, migration, and AI are obviously at the top of our agenda. Just to give you an idea, we just produced a few papers recently in terms of aging, impact on productivity. If nothing happens and nothing is done, the impact is going to be very dramatic in terms of loss and potential output, but also in terms of productivity. We also try to understand what will be the impact if there's some sort of compensation, and how can you mitigate. But more importantly, we together with the people like Andrew Scott and others, we started also a research network of the CEPR, looking at the economics of aging and longevity, try to understand what can we do. And so the OECD in the next few years will be doing a lot of work exactly on what countries should do in order to revise their systems. So remember, most of our education systems, tax systems, social security, and so on, were all designed after the Second World War, when we used to live until 65 or so on average. Right now, we're living, and your kids and our kids will be living until 90, 100 on average. And most of us will have a very high likelihood that we'll live until 80 or 90 or more. And this brings huge challenges, but also huge opportunities. It's redesigning exactly our social security, our tax systems, our innovation, our education systems, and the OECD is actively engaged on that. Also important to say that in terms of AI, in fact, tomorrow we're launching our new edition of the Economic Outlook, and we'll have a graph that is striking. We'll talk about the impact of AI on productivity and growth, but also we have a graph that I think summarizes something that you're mentioning. Labor shortage is already very pressing, especially in this area, but not only. And with the working age populations shrinking, that means that these labor shortages will tend to increase. So big challenge ahead. These are issues that I think not only the OECD, but central banks should be deeply involved. And in my new functions and together with the OECD, I intend to try to promote a research network exactly on these long-term topics, AI, climate, aging, and so on, so that we all cooperate and try to understand, design better policies. But I've talked too much, so I would like to open for questions for the governor in this stimulating talk we have over there.
Thank you very much, Governor. It was a stimulating talk. I thought your comparison, I think Alvaro also mentioned it, the working age population if we were to dramatically extend working ages and changing the ratio so dramatically, even compared to a large scale migration, was quite striking. I mean, do you have an idea about a kind of social contract that might actually be feasible? I mean, you've known the challenges we've had in France of just extending working age by 1 or 2 years and very, very heavy pushback. I don't know. I mean, I think it's actually maybe your comments on AI could be relevant. Perhaps a kind of contract that you can work half time and earn your same wage because you can actually boost your productivity sufficiently. I mean, is there something, a kind of open door, leveraging AI and older age workforce, which actually, I guess there's some evidence here at the OECD that that older age workers actually may benefit even more from AI adoption.
Thank you for that. Look, I think for me, the main thing at the moment is that we shouldn't exclude looking at all the potential options. But the most important thing, and I don't want to make this into a French issue in particular, the most important thing is that we, and this is where you guys have an important role to play, is that we actually lay out the facts and do so and sort of create a narrative that people understand. And the reality is that, and the way I think about aging in particular, Alvaro just touched on the point that, after the Second World War, people assumed retirement would be at 65. I mean, the idea that in 20 years' time or whatever, people will retire at 65 just seems sort of incredible to me. The simple basis that people back in 1945, at the age of 65, were not particularly healthy. And their post-retirement life span was actually relatively short. I mean, today, never mind in 20 years' time, people will be living for 25, 35 years beyond that. So the idea that human beings are going to choose to do nothing after the age of 65 is sort of bizarre. So I start from the proposition that people will want to carry on being active. They may want to change jobs. They may want to do something different. But I absolutely believe that people will want to continue to make some sort of economic contribution. So for me, the points are two things. Firstly, how do we help societies to reimagine what that might be? And the second thing, and I mentioned it in my remarks, which is on skills. For me, the looming issue, in view of how long we're going to be living, the looming issue is that our education system is going to have to change. Why do I say that? Now, keeping this, completely unscientific, traditionally, we've spent the first 20 years of our life learning. We spend the next 30 years, 40 years of our life working. And we spent 20 years max, a bit less, after work. Increasingly, that last bit is going to be 40 years. And my view is that people are going to want to work for much longer. Now, the idea that the education system is still going to finish roughly after 20 years is just it makes no sense to me. So we're going to have to rethink how we make people, develop the skills to be able to sustain working lives that are much longer than traditional. And having observed education reform in many countries over the last, my career, this is really hard to do. So that's where I would really spend quite a bit of energy, I confess. But I think the potential, back to your question about AI and a new social contract, I think there's lots of potential, but it does need to start with the narrative explaining what the facts are. And unfortunately, the political system gets driven by all sorts of demands and pressures. And I wish that actually some of this debate had happened many years earlier, because a lot of it's completely predictable. And now it's becoming a bit more urgent. And Alvaro mentioned that I spent some time in New Zealand before I went to Ireland. Well, the sort of pension age, the retirement age in New Zealand has been a political issue now for at least the last 30 odd years. And on the one occasion that a government was brave enough to increase the pension age from, I think, 2037 or something, it gave quite a lot of notice. The next government decided to turn it into a political issue, and so it's gone back. But the costs of having no reform will fall on our children and on our grandchildren. And I just think we all need researchers, policymakers. We just need to be developing narratives that help people to understand what these choices are.
Absolutely. Any more questions? Yep.
Thank you very much for this presentation. I just have a question regarding, you're talking a lot about workers willing to work, but another issue is firms willing to hire or rehire. So can you talk a little bit more about policies or examples that you have in mind of something that can take that into account? Because I think this is also another side of the same coin. Thank you.
Well, you have to allow markets to work. And governments need to make sure that if they see evidence of markets not working, that they sort of, in my view at least, intervene. But in the end, firms will hire if they believe that they will that workers will contribute to their bottom line. In the end, firms need to be profitable. Otherwise, it's best that they close down and capital can go elsewhere. I think certainly when I look at the Irish economy, just to speak of the example I know best right now, the demand for labour, it's only maybe this year it's slightly dampened down a bit. It's been incredibly high, partly fueled by the sort of fiscal policy the government is running, which is a bit loose, but mainly fueled by the fact that actually there's demand for what firms are making, whether it's the very big ones, pharmaceuticals or tech companies, or whether it's smaller ones. So a thriving economy is a foundation for firms wanting to hire. Policies that actually restrict the ability or the flexibility in employment. They may protect workers, but they also may make their hiring more difficult. So I think striking the right balance, and in the end, that is the classic social contract between the employer and the employee. But I think if there's one thing that government can do to intervene in public policy right now to support the future hiring of workers, it is around skills development, the education system, and not just the developing of skills, but making the process of transitioning from one type of activity to another as smooth as possible. Because I don't think that any of this is straightforward. So it deserves investment in time now.
To add to that, remember, if you live until 100, which is most of the people will, especially younger people, but you as well. If you retire at 60, you have 40 years ahead, you can go back to school at 50 or 60 and think, I'm going to do something that I've always wished for. And so you can go back to school and relearn new skills and using your old skills with new skills and start a new career. You have time for that. And so this is it's a huge revolution that we are going through. It's not only the costs, it's a huge revolution, a longevity, that we need to seize the opportunity. But of course, policies have to be the right ones. The incentives have to be the right ones. And we need the education system to be developed exactly to get that point. So I think the governor is absolutely right about that. Very important. More questions? Microphone.
Hi, thank you for your discussion. I'm curious if you could speak a bit about how income inequality might impact a person's decision to retire. And I know there's growing income inequality in a few countries, and I'm just curious if there's policies you think that could address that, or how that might play into these dynamics.
Well, actually, it's an interesting question about, and I haven't seen the research around the impact that inequality has on people's decisions to retire. I can understand that the amount of income someone has at the age of 64 or whatever, and is likely to have post-retirement, will be a massive influence on whether they retire or not. But that's slightly different to the notion of inequality. Certainly, I think, in view of my remarks earlier, I do think right now that inequality is one of those factors that is influencing the attitude towards migration. So not so much people's individual decisions to retire, but the extent of the social cohesion and the extent of the strength of social capital in a particular country is influenced by a whole number of things. Inequality, job prospects, a number of things. And that has an impact on, the availability of housing. That has an impact on people's attitudes to migration. And at the moment, I'm not convinced that actually there's a proper narrative out there, an accurate narrative in the media. So I think that is, we're going to digress into a different subject, but I'm not sure that, I think the availability of job opportunities, the amount of wealth someone has, the amount of income someone is likely to have in the future, those are more critical than someone's own position relative to others, which is what inequality is ultimately about. But I haven't seen, if there is research that I'd be interested in seeing it, but I haven't seen any.
More question?
Hi, Gabs. Sorry, Kirsta Thompson here. I had the privilege of working for you during your stint in New Zealand for a while. My question is around two aspects of the shift in education that you just described. One is cultural. I can see many different cultural attitudes to people going back to school, especially back to formal education in even their 30s, let alone their 50s. And I'm curious if you have some examples or thoughts to share on how we can work with that cultural aspect as part of the shift that you're describing. The second question is around the cost of education. It's a very different calculation for someone perhaps in their 50s with a more, or 60s with a more limited future horizon of employment to invest the amount of money, frankly, that tertiary education in particular has come to take in a lot of OECD member countries. So I'm curious if you have any thoughts as to how that aspect might need to shift, or if you have any thinking around the sort of the fiscal side of the cost of education. Thank you.
I think, nice to see you, Krishna. I think technology is actually a big potential influence here, positive influence here in both the culture side and the fiscal side. So my observation, I don't have a lot of evidence for this, but my observation is that technology is making it easier for many of us to learn new skills now. And when I think of how things have changed over the last sort of 25 years, I can't believe that it won't be as dramatic, at least as dramatic over the next 25 years. So I think the potential to change sort of people's attitudes to learning at later stages in life is, I think, will be supported by technology massively. But I do think at the same time, this is part of what I was saying earlier, I do think that we need to start reimagining education and the way we talk about it and describe it and the whole learning process. I mean, on the fiscal side, again, I think that the steady state is going to almost certainly in the future is almost certainly going to involve employers and government and individuals co-financing their breaks from employment in the future. I mean, I just think that is going to be the sort of social contract that we're going to be developing, because I can't see it otherwise working. But I mean, we are talking about a fairly long-term time horizon, but I think it's going to be government is going to have to play. Sorry, we use government sometimes as a as something that's sort of over there, but government is actually society, and I think society will want to play a role in supporting the essentially lifelong learning, if you want to use that phrase. But you'll expect the business community to play its part. You'll expect individuals to play their part as well.
More questions? I think the last question for you would be, in terms of productivity, how do you see things moving on, right? So, you think that the aging will lead necessarily to lower productivity, or do you think we'll find a way of basically being able to sustain productivity growth in the next few decades?
Well, I think one needs to be positive. Sorry, I think one needs to be positive about this. Keynes told us that it was important to be positive, otherwise you get into a pit of despair. But if you look at history, we've not been very good at taking our opportunities to improve productivity. So you need to be sort of also cautious and understand about the history. But in my view, we can't just assume that things will be fine. So in other words, I think government does need, small g, government does need to start instituting reforms that support productivity. I mean, we've been, I remember giving a speech at some OECD event on productivity more than 10 years ago, maybe it was 10 years ago. So, I've been talking, I find talking about productivity very boring but also partly depressing, even though I try and be optimistic. But the structural changes that we need to make, some of them are pretty obvious. And we find it hard to make them. But in the end, if you take aging and longevity, I start from this sort of basic proposition that if you're going to live for 40 years post the age of 60, that you're going to want to do things, right? So I just think that the natural sort of human will to be active is going to play a big role, and I think technology is going to help us massively in this. So I'm not incidentally, just to put this on the record, I'm not notwithstanding what I may have indicated earlier, I don't believe AI is going to lead to a complete destruction of jobs. I mean, there are people who think that this is, I think AI will lead to a complete restructure of jobs, but we're all going to be active in a different and hopefully more efficient way in the future.
Exactly, like any other general purpose technology in the past. With that, I just would like to thank the governor for a fantastic lecture. It was, I think, very insightful. I think the part that you mentioned on education is absolutely right. I think this is going to be one of the big challenges we have going forward. But with that, I would like to ask everybody to give a big round of applause to the governor. Thank you, and then we'll announce the new, the next governor, the lecture of the governor, one of these days. Thank you very much. Have a good day.